Here's your fast stock market update from me, Nigel Green, CEO of De Vere. Right now, the markets are risk adverse. What we're seeing is a situation whereby AI has hit panic mode. Some stock like Nvidia are down over 5% this week. S&P down 1.7. Should you panic? What on earth's going on? Well, it's literally, as Bloomberg says, risk aversion sinks the market. In other words, people are concerned. Who's going to make a profit out of AI? We knew this was going to happen at some stage. Previously, you've seen the rest of this year, the companies have just spent billions and billions pumping money in to build their AI. Now people are actually saying, well, hang on a second, is this going to pay? Chips, they're investing heavily in them, particularly with Nvidia. But those chips, they change so fast that within 2 years, they're obsolete. In other words, you spend the money now, you can't be writing that money off over 4 years. It's got to be over 2 years. That's caused the markets to reconsider. They're right now moving away from tech stock and investing in normal economy stock, consumer stocks. In other words, you've seen this rotation start. Is that going to continue? Well, right now we're in a situation whereby, for me personally, I think that whilst right now you're seeing this risk aversion, that's going to change again before the end of this year. Doesn't mean there's not going to be another AI profit check during next year. Just think, when you're investing money, you look at the FTSE 100 companies. When the market increases, you get 60 up, 40 down. When the market's going down, then you get 60 down and 40 up. In other words, there's always investments where you can make money. Right now, the healthcare industry has opportunities. The banking industry has opportunities. But if you just invest in tech, as many have done in the past, right now, that's going to give you volatility. However, do I think AI is going to be successful? Yes, but now you've got to be choosy. You can't just be investing in any company that's linked with AI. You've got to start to think, who's really going to make a profit out of this? Could it be Meta? Could it be Alphabet? Could it be Microsoft? Is it those companies? Is it a health company that's going to be coming through? If you want speculative stock, you've got to see what the next stage winners are. If you just want to make money, then invest in quality companies. In other words, ignore the hype, stick with the main economy, companies that are going to do well in the future. You'll see those companies, their multiples, the sales that they're actually achieving, their profits are linked to the share price. Whereas whether you're invested in companies like Nvidia, they're selling at very, very high multiples. That's speculative. I'm not saying sometimes you shouldn't speculate, but I'm saying the bulk of your money should be right now in cautious investments. What's going to change the market? Or let's do it like this. It says risk aversion and why the Fed rate cuts. That is what's going to drive the market. You see right now, we've got companies making record profits. Is that going to continue? We're seeing unemployment increase. Okay, if that continues, then the Fed has to step in, reduce interest rates. Market will like that. Why? They will be looking at it and saying the Fed's saving the economy, and that's going to improve employment. That's going to improve company prospects. So there's always opportunities. Make sure you subscribe to the YouTube channel. Right now, it's risk aversion that's ruling investment.